You brought up something really interesting. Maybe I'm interpreting this a little bit differently, but you kind of talked about tech, and I was in my head, I kind of went towards like the infrastructure side of just how business is conducted. Do you feel like, and I've got, a software background too, that's my day job. So I kind of think about enterprise use case and like, say you are a crypto hedge fund, like what is the infrastructure you use to conduct business in a safe, reasonable, regulated way? Like, does that stuff even exist yet? Or
Yeah.
does it need to be built? Like, was that kind of what you were getting at? Or is that just me kind of
That's you intuiting, connecting the dots for sure. So that's
yeah.
a great kind of separate but related topic to some other stuff we were talking about. So in that regard, I mean, thinking through frameworks, we're talking about kind of the arbitrage on frameworks in general. And I mean, one of the reasons that we became as interested and involved in the Cayman side of things, where kind of the flagship vehicle that we're operating and advising is a Cayman vehicle, is actually the investor protection components, where
Okay.
there's kind of back to those kind of false dichotomies. A lot of folks will say, kind of U.S. safe, kind of Cayman offshore, kind of that's like more out there or whatnot.
Yeah, money laundering, fraud, blah 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 blah.
Those are kind of the bad Netflix action movie sort of situation, right? But but so with the U.S., it's kind of a weird like a stretch of extremes, where in like a U.S. publicly traded company on the New York Stock Exchange or whatnot, it's kind of like a tank. It's got just like investor protections up the wazoo, right? But a U.S. private fund, especially around crypto, when the crypto regulation is not really very clear in the U.S. right now, is maybe a bit more like a motorcycle, where you don't really know what's going on. And for a lot of these U.S. fund vehicles, private vehicles, they're not restricting, at least right now, the use of leverage. They're not restricting the use of high risk futures. They're not. They don't have kind of as hard and fast requirements around some of these things, at least as other jurisdictions, and many of them don't require a independent third party audit of the financials of the fund. Something like Cayman, for the types of vehicles that we've been working with, it's all of the above. I mean, they're the auditors and the regulators and stuff. They're working around kind of restrictions on futures, restrictions on leverage, requirement for third party audits. So it's not just a nice thing that you provide to investors. It's a legally required to do this. That goes a pretty long way. And relatedly, there are audits and there are audits. So I mean, you can get your neighbor next door to the friendly friendly CPA next door to do an audit. And maybe it's someone that you've been going to dinner with for every Friday for the last 10 years or whatever, or you can also get a top global financial auditing company to do it. And in a framework like SEMA and Cayman, they're requiring basically one of these top global auditors that review publicly traded companies. They're requiring those types of people to overview this. So there's a lot closer to the level of rigor on those audits, is closer to something like you would approach a publicly traded company with than just kind of, hey, check some boxes. So to that point, like if a New York Stock Exchange company is like a tank, maybe a U.S. private fund is more like a motorcycle. You could argue something in Cayman is maybe like a smart car, where it's like, it's not a tank, but it's also not a motorcycle.